All right. I thought I spoke on this. Does this go? Okay. All right, so I don't know if you're aware of this, but right now there's about 700 life insurance companies operating in the United States. 700. You know that? All right, so for those who are new here, we only do term life insurance, right? Which means that we're only giving coverage for a temporary period of time, okay? So for example, if we do a 35-year term, right? A real example is my husband's brother. He had a 35-year term for $600,000 for him and his wife, paying $178 a month. Unfortunately, he passed away near 30. Okay, our company paid out that death benefit in 2 weeks, right? And he had only been paying for 3 years. Now with the term insurance, if you had a 35-year term, obviously there's 32 years left. The 32 years does not have to be paid. Okay. However, if you did live, right, for 35 years, then there's no cash value to that policy. But just imagine you pay car insurance, right? How much do you pay, Sandra? $200 a month. How much is your car worth? $10? Just kidding. No, like literally, like maybe $1,000, $5,000, $10,000. You pay $200 a month, and then your car is worth maybe $5,000, $10,000, even if it was worth $20,000, right? But when you pay that $200, does anybody think about the $200, or do they think, oh, I want to get into a car accident so I can get money back? Absolutely not, right? So anytime you talk about term insurance, I know cash value agents like to demonize it. I always correlate it with any other type of insurance that they have. You want to have it in case something happens, but you don't necessarily want to use it, right? So, you know, you're paying $200. Let's say your car is even worth 40 grand. Well, my brother-in-law was paying 178, and they were insured for 1.2 million. That's a big discrepancy, right? But for some reason, when you're buying auto insurance, health insurance, nobody thinks about it. Why is that? It's mandated. The government tells you you got to buy it, right, to protect the lender, right? Because what happens is, if let's say you have a car, Xander, you owe 40 grand on it, God forbid, you know, something happens, you get into a car accident, and you owe 40 grand still on that from the lender. If you didn't have car insurance, what happens? The lender loses money. Now, if let's say the banks did not mandate car insurance, who bails these financial institutions out?
Government.
The government. Who's funding the government? Your freaking taxes, man. Okay? But life insurance, people don't take it seriously. Why? Because they don't get anything out of it, and nobody tells them, right? There's no like immediate gratification because they're not gonna benefit from it. Does that make sense? But you gotta say, look, if you have no problems paying for your car insurance, your health insurance, you should not have any problems paying for your life insurance, especially term, right? Especially if somebody's depending on that income. Okay? So again, temporary coverage, right? And it's very affordable, right? Before my brother-in-law, before I was in the business, he was actually paying $203 a month, and his coverage was only $150,000. He had been paying for it for 15 years. His cash value was less than $15,000. Right? So he had paid over 30 grand. Okay? What Val reviewed, that was the kind of policy that he had. Okay? So with term insurance, it is very affordable, cash value. You're gonna pay anywhere between 3 to 15 times more. Okay? So there's 3 different types of term insurance. There's a level term, that's what we have, right? So what it means is, if you get a 35-year term, it's going to stay for 35 years the same amount unless you increase your death benefit, right? The increasing term means that you're paying a certain amount, but it will increase over time. It might increase yearly, it might increase every 3 years, it might increase every 5 years, or it may be a mix of both, okay? And I've had a client, I didn't pull it up, but I had a client that in the first year was only paying like less than, I don't know, like $300 for the first year. And then the second year, it blew up to like $900. So the agent gets them in, they think they're only paying 300, but on the schedule of premium, the premiums will actually go up on a yearly basis, okay? And there's also decreasing, which means that you pay the same amount, but the death benefit is going down. Where do you see these? Mortgage, right? So when you buy a house, there's an insurance, company they'll recommend. They say, look, you're gonna pay, let's say, $50 a month, and let's say your insurance is $300,000. As the price of your house, as you're paying down the home, you're still paying $50, but they will only pay the balance of your house, of the mortgage. Okay, that's what a decreasing term is. And you gotta know this, because if somebody says, I have term, you gotta know what kind of term they have too. It could be a terrible term, okay? Now, why Primerica term? Well, number one, if you're unaware, Primerica only sells term insurance, okay? Which means after, let's say 35 years, should the client need it longer, it's guaranteed to convert, and there's no medical exam needed, okay? True story. I had a client that actually had a 20-year term with a different company, right? And she was diagnosed, I think, with cancer 6 years prior, right? When she called to renew her term insurance with the same company, they flat out declined her because of the history that she had, okay? Now, I'm in the medical field. I knew it was stage 1. She only needed surgery, didn't need chemo radiation, so that's a good prognosis, right? I said, look, and this was a referral. I didn't even know this lady. And she said, look, Sheila, you were highly recommended by my coworker, and this is my situation. I said, look, I'm not gonna promise you the moon. I will say that I will give it a try, right? So when I put the application in, what I did was I wrote a note to the underwriter, and I basically explained the story of her cancer and what she had done and so forth and so on. So for those who are, new here or just starting to put policies in, you can email the underwriter about some medical conditions that you want to elaborate on. And that's what I usually do, okay? And long and behold, she actually got approved with us. The company she had been loyal to for 20 freaking years could not renew her policy. And yet here we are, even though she wasn't our client, with that history, actually allowed her to get a term insurance with us. Now, if let's say, my brother-in-law had lived and he had a 35-year term, and if he needed it, Primerica will allow you to convert it, again, no medical exam, even if they had cancer or what have you, right? Okay, but our goal is what? To make sure that they're not gonna need that life insurance after the term ends, okay? Our efficient death claim process is unmatched, right? So when my brother-in-law passed away, he passed away November 2nd. I reached out to basically, of course, she's my sister-in-law, right? I gave her the paperwork to fill out, I believe November 11th. She gave it back to me on the 23rd, still fresh. I could never forget this, because this was the first death claim I processed myself. And by December 8th, the check was in the mailbox. So it takes 5 business days, right? So literally 14 days. The national average is 6 months. And right now, I talked about this in the big event. I have a client, she's an investment client. Her husband passed away with 4 life insurance policies, different companies, not one agent can help her. I actually drove to Rockville for that, because she was my client. She reached out to me and said, Sheila, can I talk to you? I said, sure. Am I gonna talk to her on Zoom? Of course not, I drove, right? Treat your clients really well, okay? And not because it's, you're trying to get clients, it's because it's the right thing to do. Always be empathetic, all right? So, war or terror costs. I was reading about this last night. I know I've read about it, but I, refreshed my mind and, what I know about the war or terror costs. So, our company does not have this, which means that in the event the death is caused by an active war or terrorist attack, we still pay out those death claims, okay? And when I read last night, there's still a lot of insurance companies out there that have this. Now, what happened in New Orleans recently? Wasn't that a terrorist attack? How many people died? Maybe I think it was like 20-something. So those people had a life insurance policy, and their company had this, no death claim will be paid out. our company, back in 9/11, this was 2001, and back then there were a little over 200 insurance companies, we paid every single claim. Until now, there are what? Class action suits from people that have died since 2001. Term up to 35 years. Now, there are companies that do also 35 years. The problem is most companies actually offer only 20. They offer 30, but they will always encourage the client to get the shorter term, okay? And that is because it is more profitable for the insurance company to give a shorter term because the probability of somebody passing away within 20 years is very unlikely, right? As we age, that's when the health issues arise. That's when actually, it's expected. People are going to die. No one's exempt from that, right? It's just a matter of when, how, and where, right? But knowing that we can offer a 35-year term is very comforting to me, right? Especially when we have very young clients, right? And even if they wanted to renew it, right, they could still renew it, okay? Another thing, I think there's a misconception that you can only have one term. That's not true. We can actually, let's say if I had a client, we wanted a 35-year, 10 years later, they're married, have kids, they want another 35-year, you can actually stack them as a rider, okay? So just because they have a term now, maybe right now they're single, ready to mingle, 10 years later, they're married, right? Okay? We can add those on our policies as well, okay? And I think this is big, right? We educate our clients, at least we should. And if you're not, you should, okay? So for me, if I have a client in front of me, I'm always gonna assess their situation, okay? So who's married with kids? Okay, Peter. So I'll say Peter. If I'm talking to Peter, I'll say, Peter, how old are you? 37. Peter, how old are your kids?
9, 3, and 2.
9, 3, and 2. All right, Peter, so they're 9, 3, do you plan on having more kids? I should ask Tia.
Maybe in the future, but not
Oh.
right now.
All right, you said maybe in the future?
Yeah.
All right, I'll say, okay, if you still have that probability of having more kids, I probably will give you a 35-year term. Why? Because in the next 5 years, if you have more kids, at 35 years, that kid would at least be 30 years old. Do you think that, what are your kids' names?
Liam, Noah, and Lily.
Liam, Noah, and Lily. So if Liam, Noah, and Lily are already in their high 30s, maybe early 40s, do you think they should be depending on your income?
No.
Now, would you consider yourself in a position where you have a lot of assets already, that if something happened to you, are they gonna be okay, and Tia is gonna be able to buy a Louis Vuitton bag?
Yeah, absolutely.
Right? So the goal is to get them there, right? But in the early years, when they don't have enough assets, if something happens, is your family gonna be in a better position financially, worse, or the same? You love your family, right?
Yeah.
Right?
Yeah.
So you gotta put in those psychological questions, because they're not gonna say no unless they're cheating on them, right? I'm not gonna go there. But that's important, right? My goal is to what? Get you to a position where you won't need that life insurance anymore. What do other companies do? Oh, what's your budget? Oh, this is my budget. Okay, just get a 20-year term. Now, I incorporate the budget after the fact. I'll say, this is what you need, this is what I recommend, what is your budget? After the fact. You gotta tell them what they need first. But a lot of people just want to sell, there's no education that comes with it, okay? And I like the fact that Bao showed, okay, this is what I do with my clients. This is, if they had a trash value policy, I'd be like, this is what you're paying, this is what it would be with term, and this is how much money you're getting if you had invested that somewhere else. Okay? You gotta educate these clients, right? Now, I always tell people, look, Primerica's probably not the cheapest, right? But we're not also the most expensive, right? But at least we have a lot of things that we can offer to you that other companies probably can't, right? Does anybody know what an IBR is? Who said yes? Increasing benefit rate. What does that do, Xander?
10% every year.
So, increasing benefit rider means that if you have, let's say, a death benefit of $500,000, the company will allow you to increase that death benefit by 10% every year until it doubles, okay? Why is that important? It keeps up with inflation, right? At times, you know, sometimes our clients are like, look, I can only afford this, so if they get $500,000, they know they can still get to $1 million, right? Without having to what? Submit themselves to another medical exam. And this is why my brother-in-law, by the time he passed away, he had $600K, because he had $500,000 to start. He was diagnosed with cancer a year and 4 months later, but because he availed the increase in the benefit rider, he was able to increase his death benefit by $100,000. And only adding a few dollars, right, without a medical exam, okay? Now, they can decline it, right? And I always tell my clients this. You're gonna get a letter in the mail at least 2 months before your anniversary. If you don't like it, sign the back of the paper, right? Because sometimes like, oh, what the hell, you know, my premium went up. You're gonna get those calls if you don't explain it, right? That's why education is really important, okay? Foreign beneficiaries allowed for you guys that, you know, that are not immigrants, right? This may not matter to you, but for us, if, let's say, I have a new nurse that's here and they have no family, right? All the families back home, right? This is really, really important for them. And I asked this in convention. There was a lady that I spoke to, I forgot her name, but they were in the plane. You know when you go to the, what's it called, Samir? Where we have all those, you know, little booths.
Yeah.
So I asked her about this. I said, do we actually allow, our, you know, our family from, you know, from another country to be designated as a beneficiary? Oh, she said, absolutely. However, it might be just a longer process. Right? Why? Because there's a lot of scammers, right? They want to verify the authenticity of the identity of that person that's claiming that money, okay? So it might take longer than, it will take longer than 2 weeks, but it is allowed. Other companies do not allow that. That is a big deal, especially for our, you know, for our community, right? Foreign death claims are also paid, meaning that if, let's say, a client dies outside of the country, we still pay out the death. Now, I helped process one. She was not even a client. Her father passed away. He was in Africa, right? And her agent, I don't think, was actually answering the phone, but it was a Primerica client, so I was able to assist her. Now, for them, because it takes time for them to get the death certificate, right? Because they can actually make fake ones in other countries. And we were able to still get that processed within 30 days, okay? And this is really important. Like I said, we have to create that financial plan for our clients, right? A lot of agents out there, they're only insurance agents and they just want to sell the insurance. And this is why term gets a bad rep, right? Because they give them the term policy and nobody's helping them with their investments. And that's what separates us from the other term insurance companies. Make sense? If you don't have a securities license, you have an upline that probably does. Use it, right? Because when you become securities licensed, right, maybe that client might have 100, 200,000 later on and come back to you. You never know, right? Very, very important. Create that financial plan, okay? All right. So, as I was alluding to earlier, right, this is very important to show our clients of why term is what you need, okay? So, as I was asking Peter earlier, the green arrow represents, is there like a laser here?
Red button.
Red button. I can't see it.
The button with the red stripe.
Oh. Okay, so 2 arrows, green, blue. Green represents insurance needs. The reason it's up top is because in the early years when your children are young, you probably have debt. And if you just bought a house or planning to buy a house, especially in this area, right, you probably have a very long mortgage, right? If something happens to you, is this gonna be taken care of? Of course not. So this is why you need insurance during those early years, right? But essentially, right, later on, as you're paying off your mortgage, you're paying off your debt, your kids are grown, okay? And you have money in your investments, okay? Do you think you're gonna need your life insurance later on? No. Why? Because can you bring your assets to your grave? No. All you need is a little bit of money to bury you properly, and all you need is maybe right now it's 30 to 60,000. You can't take it with you anyways. You might as well use it, right? Because when people die, only 3 things can happen to their money, right? Well, actually, if, three things can happen later on with their money. Either they're gonna live a healthy life and use that money, right? They're gonna be sick and they're gonna still use that money, or they're gonna die and they're gonna pass that money over. Make sense? The important thing is making sure it's long enough and it's enough coverage, right? We have a formula, I'm not gonna go over that, right? But we wanna make sure they're gonna be taken care of, okay? And here's a company that is giving you a plan so that you can stop your life insurance, and here's another company telling you need it for the rest of your life. And you're gonna overpay for it. Right? Okay, now, blue line, oops. I'm sorry, my bad. So the blue line in the bottom, Ms. Thomas pulls it up. Right here, all right? On the flip side, in the early years, the blue line, what represents? Your investments and your assets. So the reason it starts from the bottom is middle income families typically don't have assets. But what do? We help you build your assets, right? Because let's say Liam, Noah and Lily, let's say they're already in their 30s, and you and Tia are in your 60s, right? Still looking hot, right? What is your main concern when, let's say, they already have a family and it's just you and Tia?
Having money for them.
Having money to live, right? You gotta admit, you wanna travel, you need money. You wanna, you wanna live a comfortable retirement, you need money, right? So later on, the goal is to get you to a point where you are going to live a comfortable retirement, right? You live all your life just to be broke, that's not a life to live, right? Okay, so we protect our families 100% of the time because unfortunately, based on statistics, 10% of Americans will die too soon, that's what the life insurance is for. 90% will live too long, that's what your assets and investments are for. So now your family's protected 100% of the time, okay? Another thing to add to, the presentation with my clients is, God forbid something happens, your client, the beneficiaries not only get the insurance proceeds, they will also get the, all of your assets as well, right? I get this question a lot. Like this past week, I got asked 3 times about life insurance benefit. I've been asked if it's a taxable event, it is a non-taxable event, okay? Regardless of what type it is. The only time they could tax it is if your estate is worth, like if you're single, you have close to 13 million. If you're married, like I think it's 24 to 26 million. I think that's changed, might have changed this year. Okay, any questions, guys?
Sheila?
Yes.
Yes.
Go ahead.
Yeah, question, no, I'm done.
He wanted to ask a question as well.
Sure.
So, where I'm working, I work part-time for my mom now in the morning, and a lot of the people that come in, work for DPW out of DC. And some of them have been in jail. So what is the time frame from the time they can get life insurance to the time they were released from jail? Because I know there's a time, but I don't know what the time frame is.
So I'm gonna be honest with you, I don't know the answer to that question. I've never had anybody that was in jail, but maybe our experts in there. But that's something that.
I mean, like.
I think Jen or Josh.
10 years? Okay. So I don't know the answer to that question. According to an expert, 10 years.
And does that 10 years also include for investments as well, or is it just for life insurance? It's just for the life insurance.
But
Okay, so-
that 10-year look back's on health, not on
Nah,
activity, right?
they'll look into your.
I'm not gonna lie, I've never insured anybody in jail.
Yeah. I mean, I've gotten people declined because of that.
Because
You have?
of the
They were
time
in
frame.
jail?
Yeah.
I mean, that's one of the questions in the application, right? Have you been convicted of a felony, misdemeanor? And the answer, yes, that's a risk factor. What's that? I don't know, but we can call home office. Good question. I told you, I don't know everything. Any questions, guys? Take care.